Hi everyone, hope you're all doing well. I'm definitely doing well after this market rally that we've been on recently, and today we're going to do my UK portfolio review for August 2022. So we're going to go into my UK portfolio and see how it's all doing. I will do my US portfolio probably next week, I would say. So yeah, if you guys want to see the US portfolio, that will be there very soon. And yeah, we're going to take a look at how everything's doing on the UK side. I think it's really good to just keep up that transparency, how I'm doing performance-wise, and yeah, you get to see all the moves that I'm making. We're built on transparency, and especially I think right now, like you know, it's really funny to see like how many portfolios have disappeared from the YouTube scene, or how many investors on the YouTube scene you never actually see the portfolio of. And yeah, for me, I've been posting my portfolio on here for the last 4 years, so you can track how everything's doing, and there's some accountability there as well. And yeah, I do this every 3 months on the YouTube channel. I actually do it on the Patreon, so if you do want to join that, link is in the description. I do it every month on the Patreon, so if you want more regular updates, that's the place to be. So yeah, with all that out of the way, we'll get stuck onto this UK portfolio. So overall, everything's going, I would say, pretty well. You know, considering that we're in a bear market and the portfolio's kind of hanging in there. Obviously, there's a few stocks that have took a bit of damage over the last few months, as expected. You know, it'd be absolutely amazing if all the stocks walked through this bear market situation without being hurt, but there's a little bit of damage there, but there's still the portfolio performing quite well, I feel. And I'll spend a minute or two on every business and try to say my current thoughts on the situation. So starting at the top, Airtel Africa. So this is a dividend stock that I have, pays me a very good dividend. I think I get around about 6% yield from this. I also think it's massively undervalued. Even with me being 100% up on this position, it's been an absolutely amazing performer. Had a bit of a pullback recently. I think a lot of the outlook spooked investors, even though it's never been priced that it was going to carry on growing at crazy rates. So yeah, we'll see what happens there. Potentially it could be an opportunity to buy it more, Airtel Africa. I would not mind it coming into my, I think it's very close to being one of my top 5 biggest UK holdings, but if I can push it into that top 3 potentially, we'll see what happens there. I think they've got a very bright future with more 4G ramping up and the mobile money part of the platform. I think that's got you know, amazing growth to go ahead going forward. Next up is Asos. So Asos is a bit of a tricky one. I probably jumped in too early on Asos. Asos was one of the first UK stocks to dip a huge amount, and at the time when it dipped, every other company was doing absolutely amazing. There was no kind of weakness. I think this was around maybe June time, May time, last year. And yeah, it was the first company to kind of say, oh, there's a bit of weakness here, and the stock absolutely tanked. And looking at Boohoo was suggesting there wasn't that much weakness. And I thought, okay, we'll see what's going on here with Asos. It's a good high quality business. And then every single stock went down. And if I knew we were going to have a stock market crash, I probably would have saved that capital and reinvested it into something else. So yeah, went a bit too early on this one. However, Asos, you know, I think it's still a very safe brand that has a very safe future going forward. Obviously, it's going to have a few issues, like it did, I believe, it was 2014. Was it 2014 or 2018? It went through a few issues very similar to where it's going through right now. So I think it'll be okay. Just from my point of view, I wish I kind of held off a little bit more on that one. Next up is Bright Development, so I'm currently down 4% on this one. I am trying to build this into a very big position just because I feel like I'm going to get a lot of share price appreciation. As well as that, I think it's a very nice dividend yield. I think it's like a 7% dividend yield. And I think that when you look at the slowdown in the housing market that's priced into Bright Developments, I don't think we're going to get there. Like, I think we might have a slowdown in the housing market, maybe 5-10%. But you're looking at the price, what's being priced in, and it's like, you know, a 30-40% slowdown in the housing market and a big pullback. I don't think it's going to happen. I think there's too much demand for houses. There's too many people wanting to get on the ladder. If there's even a slight drop, a 10% drop in the housing prices, a lot of young people that are wanting to get on this housing ladder prefer new builds. They will jump at a 10% drop in share in house prices. So yeah, I think it's a very easy, solid play for me to be buying that one. And there's plenty more. You know, I buy Barratt Developments, but if you're someone that's buying Taylor Wimpey, if you're someone that's buying Red Road, Persimmon, I think, you know, you'll do well either way. I think that the only reason why I go for Barratt Development over a lot of the other ones is I just think it's got such higher quality build. I know it's still not perfect. I know a few people still have problems with them, as you do. But yeah, it's I think it's a pretty safe play. Next up is Boohoo. So I'm down 55% on Boohoo. I still think that's going to come back really strong. I still think it's going to come back to doing decent amounts of revenue growth. Profit will come back. Sort its logistic issues out. I think that's all going to be sorted out for Boohoo in the next 24 months. I haven't really actively been buying Boohoo. The reason why is you can see here the allocation. The allocation is, quite big on Boohoo, and even though I want to buy it and even though I think I'll be okay, I always have to be very careful that at the end of the day, I've got to not be careful to get caught up into my own hype for it. And what I mean by that is that as much as I think Boohoo will be okay and do well, I've got to have the realization that I could be wrong. It could happen. There's always going to be some investments that, you're going to pick some stocks. And if you pick 30 stocks, you go into all them 30 stocks with good intentions. They're all going to work out. But at the end of the day, you've got to realistically think that actually in them 30 stocks, you're going to have 3 or 4 that don't work out. That's part of investing. It's going to happen. And I've got to be careful that Boohoo isn't one of those 3 or 4 stocks. And let's just say that, Boohoo balls up and it goes terrible. It's a big allocation. And I've got to be careful not to have a crazy allocation, because if this goes wrong and I have a big amount of my net wealth tied in that position and it goes terribly wrong, it's going to take me a while to recover that net wealth. It's going to take me a while, and I've got to be really careful. I've got to protect my capital, capital that I've worked hard for, that I built up over the last, how many years. I've got to make sure that it doesn't all go wrong in one investment, and that's the only problem I have with Boohoo right now. So maybe if I build the other positions up and Boohoo stays down at these prices, then I can go back to buying Boohoo, or potentially it shows us more improvement in the financial side of it, which it hasn't been doing at the moment. That could potentially reduce the risk there, but at the moment that's where I'm at with that one. So we've got best of the best down 55%. Best of the best, I generally am very bullish still on best of the best. Like, I look at the valuation, I look at the balance sheet, I look at the profit, I look at the dividend. I think this is going to be a company that has decent amounts of share price gain and a decent dividend. So and financially the financials were actually pretty decent from last earnings. So I'm not going to jump all in yet. I'm just going to make sure that financial improvement carries on and they don't get hit more by the marketing effects that it's had recently. So I'm just going to sit back and watch that one. But if as long as the financials keep improving on that one, I'll actually start averaging down on that one a bit more. Kate Box, I'm down 24%. I will buy this one quite a bit. The financials has been absolutely amazing. I think it's a good profit growth, good revenue growth, good dividend as well. It's got everything. Next one's Card Factory. Card Factory, it has that. When I first started buying Card Factory, it had that risk of bankruptcy. Now that risk of bankruptcy has pretty much started to fade away from Card Factory. So it was my highest risk position in portfolio, and now it's not really there, not that high risk anymore. And it's only up 11%. Now when you look at this stock price compared to the CV times, and you look at how good the recovery is starting to be on this business, you're like, maybe it should be up more than 11%. So, I would really like to buy more Card Factory. I would like it to be a little bit lower for me to buy more Card Factory, but I generally think this should be a lot higher than where it is right now. So, I think we should see a good run in Card Factory anytime soon. Next up is Jet2. So, Jet2 up 30% on that one. It used to be up a lot more. It's been hit by a lot of the travel issues that has been clear on the news recently. So it seems very much for the National Express as well. But Jet2, bit of an airline play. Not going to ever make my biggest position up, but I think it's a very solid airplane company in what it has with reputation, growth-wise, profit-wise, balance sheet-wise. So big fan of that one. It's a Leeds company as well, and being from Leeds, you got to support the Leeds companies, And next up, Greggs. So Greggs, most of you guys probably know, I actually sold half my position in Greggs a couple of months back. I sold that out for 100 and something % profit. And that's the thing with portfolio reviews, it never shows the profit you've taken off the table. But it's a bit of an awkward place for Greggs. Like the recent earnings were actually really good. But the problem is that like it's not cheap enough for me to buy, but it's not high enough for where I want to sell it. So I'm just kind of holding and collecting I'm collecting a nice dividend though. So it's been a very good performer. Hollywood Bowl up 17%. I think this should be a lot higher. I think this should be 30, 40, 50% up. So I bought recently, so I don't want to buy too much more Hollywood Bowl. If it can dip into like the single digit range, maybe average up a bit more there. But I'm just kind of holding that one, and I think it should go very soon. Hotel Chocolate. So Hotel Chocolate, I think they had their earnings. I think earnings weren't great. Obviously, with the news that they're going to slow down their international growth. However, it's still going to have some international growth there. It's still going to be very, profitable. It's still going to have some decent revenue growth. I think the drop off was crazy drop off. So yeah, I'll probably buy a bit more hotel chocolate over the next few months. Especially if I see the financials stabilising very well. So yeah, I'll keep an eye on that one. JD Sports up 13%. Yeah, I'm quite happy with that position there. Legal and General up 27%. Maybe I should make this actually a bit bigger, but it's a very safe stock. Good growth, stable growth, and obviously great dividend stock. National Express up 19%. I think this one should be a lot higher as well. I can understand why like Jet2 is having these issues, but when you look at like National Express, their recent financials were absolutely amazing. So yeah, maybe I should be buying a bit more National Express. I'd like it to go a bit lower, but yeah, I think that should be a lot higher. S4 Capital down 48%. S4 Capital is probably going to be one of my priorities to buy in this month. I would actually generally like to get S4 Capital as my biggest UK holding. So yeah, I would like it to take over Boohoo, especially at these top prices. So it's going to be one of my aims to buy that one as much as I can. I think the sell-off that's been on is just absolutely insane. Like the business has been performing absolutely financially amazing. It's actually finally come out with like one blip in its financials, and it was a little bit of a miss on what we was hoping for. But yeah, for some reason, a 20 million EBITDA miss has now converted into 700 million of market cap wiped off. It's just insane. So yeah, I think that's an amazing opportunity. And then we've got 88 Casinos up 6%. Not sure what I'm going to do with this position. There's part of me that thinks sell it. There's part of me that thinks this is your time to buy it because it's actually a pretty decent valuation. There's part of me thinking switch 88 Casinos for Flutter because Flutter's going to be a lot better performer in the next few years. Yeah, many of you guys know that have been watching these portfolio reviews. I've been like flip-flopping on 88 Casinos for a while what I'm going to do with it, and I've still not got anywhere months later. So yeah, still deciding on that one. I'd like to hear you guys' opinions on 88 Casinos in the comment section actually. So yeah, that's the UK portfolio, guys. Hope you enjoyed it anyway. Yeah, pretty happy with how everything's going. A lot of stocks have performed very well. Obviously there's one or two that have taken a little bit of a hit in a bear market as you'd expect, but yeah, it's all going pretty well. So yeah, I'll update you guys on my US portfolio in a few days time anyway, guys. So I hope you enjoyed it anyway, and yeah, I'll catch you in a bit.